Yo, welcome back everyone. Something inside me has been waiting for this moment for what feels like an eternity, and now, finally, it is unfolding right in front of our eyes. Bitcoin has reached a major price zone that we have been watching, analyzing, and tracking late into the night. Touching this key level represents a critical technical milestone, and I want to walk you through every single reason why this area matters, because this movement is not random. It is part of a broader structural narrative written across the charts. Welcome back to Crypto 101 Central. I'm Leo. Before we dive into the heart of this chart, if you find value in these deep market breakdowns, please subscribe to the channel and hit that notification bell so you never miss a moment when the market decides to shift. Only recently, price action reached a key Fibonacci retracement zone, a level that technical analysts monitor with immense patience, hitting almost right on the mark. At the same time, price extended directly into a major high time frame area of resistance on the weekly chart. On top of that, we are interacting with one of the most significant macro trend lines on the entire Bitcoin chart, a multi-month descending line stretching down from previous record highs. We are sitting almost exactly on top of this resistance cluster. A golden Fibonacci level, weekly resistance, and a macro trend line are all converging to signal caution at these heights. Furthermore, volume indicators on the 4-hour timeframe show the value area high, lining up with remarkable precision at the very spot where Bitcoin is currently facing headwinds. On the lower timeframes, we did observe a modest upward reaction from that Fibonacci zone, but the underlying volume behind the move appears relatively thin and light. Part of this consolidation can be attributed to typical weekend trading conditions, where lower liquidity often leads to choppy, indecisive price behavior. Even during these quiet periods, trading near a major structural ceiling suggests that downside risk remains elevated, making defensive or cautious positioning worthy of consideration, not just for Bitcoin, but across major altcoins as well, as assets like Ethereum face rejections near their respective local resistance zones. You might be asking yourself what happens next, where the primary local support sits if Bitcoin pulls back, and where the higher targets lie if momentum continues. Even if price pushes further into resistance, maintaining a structured risk framework allows us to adapt without panic. Looking at the daily chart, a key support area has formed around the mid-$60,000 region. When anchoring volume-weighted averages to recent local pivots, that zone aligns closely with previous swing lows. Multiple technical levels converging in the same area creates a clear reference point to monitor if price begins to drift lower. Beneath the surface, order flow indicators present an intriguing picture. Cumulative volume delta has been creeping upward, showing buying interest entering the market, even as price struggles to form higher highs. When buying volume fails to push price higher against a major resistance level, it often indicates absorption by larger market participants. While certain trend indicators on the 4-hour timeframe may hint at bullish momentum, experience teaches us that late-stage rallies inside broader consolidation zones can frequently act as bull traps before a larger multi-step correction unfolds. What if the market refuses to bow down here and instead pushes higher, straight past local weekly resistance toward the next liquidity pool? It is essential to remain prepared for multiple scenarios because sound market analysis requires holding different possibilities in balance. There are significant liquidity pools resting above recent local highs where stop orders are naturally clustered. A sudden spike into those levels could sweep remaining liquidity before a broader trend decision takes place. Remaining patient and waiting for clear confirmation, such as price closing back below the value area high, provides a safer basis for evaluating potential entries. Beyond short-term chart patterns, momentum metrics on the daily chart offer additional long-term context. Momentum oscillators remain near overbought territory, and historically, sustained overbought conditions within extended range-bound markets are frequently followed by cooling-off periods. Divergences on intermediate timeframes between price and momentum further reinforce the importance of avoiding emotional position chasing at local highs. Turning to Ethereum, price action recently swept the liquidity above its own local highs in a swift move, illustrating how liquidity hunts frequently precede deeper structural pullbacks toward primary Fibonacci and volume-weighted support levels. Managing risk through these phases is simply part of navigating financial markets, where strategies must be continuously evaluated and adapted as new data arrives. If you found value in this comprehensive breakdown, please consider dropping a like on the video. It genuinely helps the channel reach more viewers seeking objective market analysis. Leave a comment below sharing your own perspective on where Bitcoin and Ethereum are heading next. Thank you so much for watching all the way through. Go check out our other market analyses on the channel And don't forget to turn on notifications so you stay informed on every major market update. Until next time, stay patient, manage your risk wisely, and I will see you in the next video.